Welcome to weekly view on markets. Market continued consolidation during this week in a small range. Market activity and volumes were low due to holiday season. Technical charts indicate further consolidation in the coming week also. However, long-term uptrend remains intact on the charts. Quarterly three results and upcoming budget expectations will be the trigger for the markets in the month of January. Nifty has closed at 26,042 with a gain of 76 points for the full week. Bank Nifty lost 58 points. It has closed at 59,011. Mid cap index just gained 4 points and closed at 60,314. Small cap index outperformed the market. It has gained 305 points. That is 1.75%. It has closed at 17,695. India VIX is below 10, it is at 9.15. That means there is low volatility in the market. So the trading range is very small. Most of the sectors gained a little bit or lost a little bit. There was no major movement. So market breadth was negative for the full week. Defense sector gained 3.32%. Metals gained 2.71%. Public sector companies gained about 2.35%. Commodities, media gained around 1.1 to 1.2%. Energy, FMCG, auto manufacturing, NBFCs, infrastructure, all these sectors gained little bit and they were more like consolidating. There was no major gain. PSU banks, consumer durables, information technology, pharma, realty, healthcare, all lost little bit, but they were also consolidating with negative bias. So overall market breadth was not very good. So people must have not seen gain in their portfolios during the week. Now let us look at technical charts. This is the daily chart of Nifty index. As we can see, Nifty index is trading in this range. On the lower side, the range is 25,700, and on the higher side, range is 26,200. Nifty is likely to continue to trade in this broad range in the coming week also. This is a chart of Nifty mid cap index. We can see mid cap index also is trading in a range. Lower side range is 59,500 and higher side it is 61,000. Only when this range is broken, then only we will see big move in the Nifty mid cap. This is the chart of Nifty small cap index. Small cap index, as we can see, it has touched a high at 19,200. It was sometime in July 25. And after that, it has been making lower tops, lower bottom. It is in an intermediate downtrend. It is trading in a channel. This upper line and the lower line indicates the channel. It has to break out of this channel. That will happen when Nifty crosses around 18,200. 18,000 to 18,200 is quite a big resistance for Nifty small cap index. It has to cross this level, then we will see big move in Nifty small cap index. But from the lower level, the small cap index has shown good uptrend. It has shown outperformance in last 2 weeks comparing to other indices. So We hope that Nifty Small Cap Index will move towards 18,000 in coming weeks. This is the chart of Nifty Bank, that is Bank Nifty Index. Bank Nifty Index also in a range, and on the lower side it is 58,700, and on the higher side it is at around 59,900 to 60,000. Bank Nifty has to take out this range. After that only we will see big momentum in Bank. Now let us look at some of the macroeconomic fundamentals of the market. Indian macroeconomic fundamentals continues to be good. RBI foreign exchange reserves is at 693.3 billion US dollars for the week. It is up by 4.3 billion US dollars in this week. Rupee, that is foreign exchange rate, has done better during this week. After hitting almost 91 level, it has traced back. It is at 89.27 rupees per dollar, and dollar index is quite steady at 98.59. Crude price is also on the lower side. It is at $60.64 per barrel. Gold price is hitting new highs every week. This week it is at 1,41,220 for 10 grams, 24 carat. Gold, silver, and all other metals have staged a good rally based on the global demand for metals, and this uptrend in metals is likely to continue. Core sector growth for the month of November 25 has come at 1.8%. Cement and steel sectors have shown good growth. On the back of this, the overall core sector growth has come at 1.8%, which is quite good. FIIs continue to sell in Indian markets. They have sold 4,289 crore during this week, and DIIs continue to buy. They have bought 12,025 crore in equity during this week. Continued DII buying and reduced FII selling. They used to also sell more than 10,000 crore per week. That has been reducing to, that has been reducing to around 4,000 crore per week. So because of this, market is not falling in a big way. It is giving support to the markets. So any dip due to some global news is a good buying opportunity. Markets will look forward for quarterly three earnings, which will start from second week of January 2026, and also market will look for upcoming budget announcements. In expectation of good budget move, markets may go up in the month of January. Railway stocks have already started rallying in expectation of budget announcements. 2026 will be a better year for markets and also for the investors. Investors have not seen any good return in equity for last 1 year. 3 to 4 quarters results have gone by, but markets have not moved. So that is helping the valuation of the stocks and the market. So 2026 is likely to be better than 2025. It will give better returns to the investors. Corporate earnings have started picking up, and also after 1 year of correction, market is likely to do well. In Indian markets have never corrected for more than 1.5 year continuously. This is the historical statistics of Indian market. So on that basis, somewhere we are nearing the end of this correction phase, and markets are likely to do well in the coming year. I wish a happy and wealthy 2026 for all readers. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions, which I will reply. We'll meet again next week. Thank you.